Good afternoon, Bahamas, wherever you may be listening in at anywhere throughout the archipelago. My name is Marlon Johnson. I'm the Acting Financial Secretary, and it is indeed my pleasure to welcome you yet again to our annual budget press conference that is held in the aftermath of the budget speech in Parliament. Today, our format is very straightforward. I will call up the Honorable J. Kwesi Thompson, Minister of State for Finance, who will give a presentation, a brief overview. I will then follow with a presentation outlining elements of the 2021-2022 fiscal budget. And then afterwards, we will follow that by a question and answer session from members of the press. It is now my pleasure to introduce to the podium the Honorable J. Kwesi Thompson, Minister of State for Finance, to give opening remarks. Minister Thompson.
Thank you very much, F.S. Johnson. Good afternoon, Bahamas. I am grateful for the opportunity to stand before you today to open this administration's fourth National Budget Press Conference. I open by first acknowledging God and pray for His continual wisdom and guidance in all our decisions. Before I begin, I also want to publicly acknowledge the highly skilled, competent, and professional staff at the Ministry of Finance, particularly Acting Financial Secretary Marlon Johnson, Senior Economic Advisor and former Central Bank Governor Wendy Craig, and the entire team for their tremendous work. I am proud to be a part of this truly extraordinary team. This press conference is a tradition we started in 2018, and with a clear objective to make the budget information more accessible to Bahamians and the budget process more transparent. For 4 continuous years, we have upheld our commitment to the accountability and transparency by engaging in broad multimedia public education surrounding the annual budget. This is important to note because before coming to office, the budget process was not structured to be accessible for those who will be most impacted by it. This press conference is just one of the ways we maintain that commitment. The decisions we make over the next few weeks and part of the budget debate will guide how the government spends public resources for the betterment of the Bahamian people. And over the course of the next few weeks, the public can expect a steady stream of resources and virtual events, all tailored to ensure everyone has an opportunity to know and really to understand the government's fiscal and economic plan for the year ahead. Indeed, this is really what the national budget represents: a plan, a fiscal and economic plan that guides the government's strategic activities for the upcoming fiscal year. So while the revenue, expenditure, and deficit numbers, they are very important. But the budget describes our plan, our priorities. It's really a roadmap for the country for the next year. So on yesterday, the Prime Minister clearly laid out where we are, where we want to be, and how we intend to get there. So last year, in the wake of Hurricane Dorian, and with the terrifying scope of the COVID-19 pandemic coming into focus, the government presented a well-thought-out plan to protect the well-being and engender the confidence of our citizens and residents. Also, to maintain economic stability during the COVID-19 induced crisis, and to plant the seeds for an accelerated recovery. The priorities and targets to support these objectives were laid out in the previous budget, Resilient Bahamas Plan, and the Fiscal Strategy Report. These were not just pretty books, but they really were guides that the Ministry of Finance has been committed to over the last year. This fiscal strategy was presented to Parliament and international agencies. By the end of March 2021, in our report to the Bahamian people, the government invested over $327 million in actualizing the Resilient Bahamas Plan, funding for COVID-19 public health and safety measures. We also had funding for unemployment assistance and for small business continuity loans and grants. There were also a number of tax credits for small businesses and payroll support. To this end, to put this into some perspective, through the Resilient Bahamas Plan, I want us to pay attention to these numbers. Through the Bahamas Resilient Plan, we assisted some 85,000 displaced workers. We fed 72,000 households, saved approximately 15,000 private sector jobs, and funded an estimated 1,000 entrepreneurs and small businesses during the height of the economic crisis. You know, while we are encouraged by these accomplishments, we have a lot more work to do. But even as we can see an end to the global pandemic, thanks in large part to the rollout of the vaccines around the world, we are still on the road to full recovery. Our immediate response was successful at staving off and buffering the very worst effects of the pandemic, while continuing to support post-Dorian reconstruction efforts in Abaco and in Grand Bahama. As the Prime Minister has made clear, during this budget, we are building on that success by sustaining our support for public health and social welfare initiatives while accelerating our national recovery. Let's talk a little bit about the Accelerated Bahamas Recovery Plan. Today, the end of the pandemic is in our view, but the full economic recovery to pre-crisis levels is really still in the distance. Not to mention our true growth ambitions for the medium and long term. Today, the government still has a significant revenue problem. And because of this, we are forced to run high crisis time deficits, which are adding to an unsustainable debt level. The country is also facing persistent unemployment, and the private sector is contending with business closures. For decades, we've been stuck with an anemic growth as key economic sectors, have also been declining, unfortunately. These long-standing and persistent problems can only be solved if we shift the fundamentals of our economy in a major way. So what is the solution? We say accelerated economic growth is the solution. I do not believe that we can tax our way out of the current circumstances. We must grow our way out. But how do we create that in a down economy in the middle of a global economic crisis? Well, we must build on the foundation for greater private sector participation and better government facilitation. At the heart of the Accelerate Bahamas is a plan to invest in economic growth. And we are doing so in targeted ways to generate immediate and long-term returns. The immediate payoff is the support we will continue for our families, communities, and businesses still trying to recover from the twin crises that rocked our nation. The long-term payoff is structural shifts in the way our economy works. As a government, we want to see greater private sector participation in the economic life of our country. And we want to be better facilitators of private sector growth. This vision is not new to us as a government or as a party. It is a deeply held part of our political legacy. We believe that our country does well when we create a dynamic environment for the private sector to grow and innovate. For too long, the government has placed itself as the center of economic life. The Accelerate Bahamas Recovery Plan seeks to leverage our limited public resources gathered through the productivity of hard-working Bahamians in a more strategic way. We will deploy these resources to address the immediate needs of our ongoing recovery and our more fundamental challenges, like revenue shortfalls and an anemic growth. Our plan recognizes that by expanding and motivating private sector participation, instead of solely relying on direct government payouts, we can create more robust pathways to increase employment, to stimulate economic activity, and therefore increase revenue into the public purse. For too long, we have relied on the government to be the primary source of employment, using public funds as a band-aid for long-standing acute structural deterioration. Instead, this administration is choosing to use tax incentives to stimulate private sector employment, to create jobs and opportunities that carry the potential for sustainable long-term security and professional advancement. Similarly, we are creating special economic zones in our family islands to give residents and businesses new impetus for developments that will jumpstart their local economies. we have committed to targeted public sector infrastructure projects that will stimulate economic activity. And we have recommitted to attracting quality direct investment, as well as leveling the playing field for domestic investors. We will launch the new Invest Bahamas agency, and we will streamline the rules for investors. We are committed to attracting private sector funding through the creation of a fund for public infrastructure projects. We also will expand the central bank's digital currency sand dollar ecosystem. We're going to provide funding for upskilling our workforce and expand the provisional business licenses. This budget also provides for more funding for small business development and is committed to new innovative crowdfunding rules that you will hear more about. We are going to drive, and this is particularly important to me, we are going to drive the digital transformation of government and pivot away from the old bureaucratic way of doing things. By doing so, we will transform the government itself into more efficient machinery that can better facilitate private sector expansion and economic growth. Ladies and gentlemen, the elephant in the room, though, is the debt level. You know, commentators have pointed out that the current fiscal year and the one to come have elevated borrowing by some $2 billion. As the Prime Minister said yesterday, in this administration, we do not gloss over this fact. The $1.3 billion projected deficit in this current fiscal year and the $951 million deficit projected for the 2021-2022 fiscal year, it really reflects the extreme economic crisis caused by Dorian and the pandemic, and our response to these crises. This is what has caused us to postpone, only temporarily, but to postpone the path to fiscal consolidation and balanced budgets that we were really pursuing with great success. It was this administration that brought the deficit down to its lowest point in a decade. But given the circumstances, and I believe all will understand, given the circumstances, and only because of these circumstances, we have had to deviate from this very deliberate objective. Both Bahamian and international economists have pointed out that the government's fiscal response is the right one. It was even acknowledged by the IMF that postponing our debt targets were appropriate. In its recent Article 4 assessment of the Bahamas, the IMF had this to say, and I quote, "Directors agreed that the near-term priority is to save lives and livelihoods, and postponing the achievement of the public debt target by another 2 years in response to the pandemic is appropriate. However, putting debt on a clear downward path over the medium term and rebuilding buffers will require significant fiscal effort, end quote. This is precisely the balance we have struck in the fiscal strategy and continued in this budget. Now, some will say, take care of the people. Take care of the people now. And they say, now is not the time to focus on debt reduction. That's what some may say. Others will say, this debt is unsustainable, and we must stop the spending and stop the tax breaks, or even raise taxes to reduce the debt level. This budget strikes a necessary balance. It provides very targeted and focused tax breaks and concessions that are principally geared on accelerating the pace of economic activity and recovery. Most importantly, all of the tax breaks and concessions are paid for by the incremental tax measures outlined in the budget. We made the deliberate decision that the concessions would have to be matched with corresponding revenue gains to pay for them. This is the responsible way of doing it. As far as ensuring there is a strategy to address the national or the nation's public debt sector or public sector debt levels going forward, I remind everyone that we are the administration that put in place a Debt Management Act precisely to ensure that this government and future governments develop and publish a public management debt strategy, or a debt management strategy. You will also hear our team today speak to the Debt Management Act that comes into force in July that will require a unit to be formed to increase capacity and for the debt management strategy to be published. In addition, we will remain focused on meeting the targets in our fiscal strategy to reduce the deficit to acceptable levels with fiscal discipline, things like sinking funds, and economic policies that accelerate growth. So as the Ministry of Finance kicks off the budget season with old and new traditions, the budget communication delivered in the House of Assembly and the National Budget Press Conference, I want to encourage the Bahamian people to join the conversation, tune into the debate, and connect with the Ministry of Finance on social media. This administration has a plan that will support the country's accelerated economic growth and continue support for the most vulnerable in the midst of this ongoing crisis. We want you to know about the plan. We want you to ask questions about the plan, feel good about the plan, and understand how the plan can and will benefit you. And for the entire month of June, the Ministry of Finance will engage in public education activities around the plan. We have named it the Accelerated Bahamas Recovery Plan, or Accelerate Bahamas for short. And we are confident that this time next year, we will have achieved our objectives. With that, I now turn it over to the Acting Financial Secretary, Mr. Marlon Johnson, who will go over the 7 key policy pillars of Accelerate Bahamas and the specific budget measures under our plan. Thank you and God bless.
Well, good afternoon. As I get ready to set up the plan, I will go over a presentation that will appear on your screen, and just to provide you with some oversight of some of the key elements of the plan. And in so doing, we'll just highlight some of the key numbers, some of the key facts, some of the key figures that inform the plan. So we're waiting for the team to get this set up. All right. So what I'm going to do is just really sort of key in on some of the key elements of where we are and what informs this plan, talk through some of the numbers and some of the rationale. So first off, the truth of the matter is that the plan's based on is really what's happening in the economy. In fiscal year 2020 and 2021, and I have to point out that this will be different from the annual economy numbers you see. So for instance, we just saw the report from the Department of Statistics that talk about calendar year 2020, calendar year 2021. These numbers reflect the fiscal years which run from July to June. So in the current fiscal year, which started in July 2020 and ends now in June, we expect straddling those 2 periods of economic contraction of around 6%, which is the largest contraction in any single year that we had since we began doing the fiscal budget in this format. We do expect, though, that as the economy rebounds, beginning from July 2021 to June 2022, we're going to see real growth of around 4%. So it means that we had a substantial contraction, and as the economy opens back up, we're going to see a pretty significant rebound of the economy. Even after this, when we get to next July, the economy in real terms will still be smaller, but it would have caught up at least 80%, 70 to 80% of its capacity. The other key thing that will determine the success of the plan is how well the international and national vaccine campaign goes. We've seen already in the United States, we see in Britain and elsewhere, that as more persons become vaccinated, those economies are able to open back up more, persons are more prepared to travel. The extent to which we are vaccinated in the Bahamas, that will also shape how quickly we can open up fully and what we are able to do as far as getting back into full entertainment and to the activities that also make us a destination of choice. And then, of course, finally, our success is based on what we see as far as the growth in international travel. One of the promising developments is that, and you'll hear more of this as the budget goes on, is that certainly since the beginning of the year, we've seen a very, very strong rebound in our stayover segment of our travel. It still isn't at pre-COVID levels, but it is trending very much in the right direction, and especially in the Family Islands, especially around the higher-end tourism market, there's substantial growth. So even with that promise of growth, what reflects the substantial deficit and deficit position we have now is just the reality. Our fiscal deficits, as the minister would point out, remains higher than desirable simply because the government is dealing with the twin crises and the need to continue to support the economy and to support individuals. Demand for social support is still high. If you look at the revenue foregone in some of the programs and the actual allocations made, you're talking about $100 million or so in ongoing social support. Of course, you still have a high measure of unemployment, and because of that, you have what's called a lot of spare capacity in the economy. People are unemployed, so they're not obviously spending money, and that puts strain on the revenue flows of businesses, and it creates this need for higher social spending. And the pressure on the healthcare system persists. Within this fiscal year, the government has spent over $20 million just on COVID-related healthcare expenditure. And so, of course, because we're not quite past COVID, that pressure will continue to persist within the system. So what does all of that mean? The government, in its expenditure side, has increased expenditure for just over $200 million year on year, and that translates into about $2.83 million in recurring expenditure. Again, a significant element of this, one of the substantial drivers, is the increase in debt servicing, which is just over $100 million, reflecting the higher deficits and higher debt, as well as substantial social welfare spending. Capital remains elevated over and above the historical trends, and that too is reflective of the plan, because in order to facilitate the economic recovery, infrastructure spending is critical, both as far as creating jobs and as far as putting in place the critical elements, especially in the family islands, that allow for economic activity. The roads, the bridges, the airports, those are the things which fuel and facilitate accelerated economic growth. Because of that, going into the upcoming fiscal year, the government is projecting a deficit of $951.8 million, or 7.7% of GDP. It's way beyond our historical norms, but again, it's trending in the right direction, as this year we anticipate a deficit of around $1.33 billion. So I just want to go quickly through the pillars of the government expenditure. So again, to explain the context. As the Prime Minister said yesterday, as the Minister just articulated, the government has come up with a strategy that intends to accelerate the economic growth. And that accelerated economic growth is important simply because if we are to avoid the last decade, what we call the lost decade, fall in 2008, it will be important that economic growth is robust and sustained. So the key elements are around creating jobs. When people get back to work, they start to spend, and that fuels economic activity. It's about catalyzing small business development, about making sure that the healthcare sector is much stronger and more robust, and continue to support the vaccination deployment strategy. Of course, it's about making sure that what happens in the tourism space is very targeted and focused, so that the visitors that are coming, we're able to extract value. About making sure that the framework for public and private sector investment is sound. And of course, underlying that whole soundness of investment is the digitization and innovation strategy. And certainly everything that happens must be underpinned by fiscal responsibility. That notwithstanding the current dislocations, there has to be something underlying it that will take the country back towards what we call fiscal consolidation, towards a balanced budget position. So just to go through the elements. So cross-creating opportunities for employment, one of the things that the government did last year was the payroll support program. As the minister and the PM said, under that program during this current fiscal year, private companies actually got some $43 million in tax credits and tax deferrals. And because of that, they were able to actually meet the payroll for some 14,000 private sector jobs. So in addition to keeping the public sector employment intact, that program actually allowed for 14,000 persons to remain employed in the private sector. And the government is sort of building on that with an employment incentive program. And what that means is that for every additional employee that a company brings on from July, if they are part of that program, the government will pay up to $400 per week in tax credit to allow persons to get employed. So there's a ceiling of 10 employees per company, and there has to be a net gain, and there are some other validation and compliance mechanisms to ensure the integrity of the program. But what that's intended to do is that should create around 2,500 jobs. As employers, the government will, in essence, be providing you direct support to meet the payrolls. Of course, there's a small business tax concession and relief program. As the Prime Minister said yesterday, this is about leveling the playing field. And what that means is that all Bahamian entrepreneurs, all Bahamian small businesses will now be eligible for tax concessions, both for the elements of their business build-out, whether you're building up a business or expanding a business, and for your first inventory within your business, which is something even the big businesses do not have. There is true that there are some manufacturers and some segments of small businesses do attract this, but this opens it up to all small businesses. And that will be done by application, and this will roll out on July 1 when the new budget rolls out. So this actually now allows small businesses to get the same concessions of a mega resort or a large manufacturer. Of course, key to this is around what's happening with small business access to capital. So this budget allocates together between recurring and capital some $35 million for the Access Accelerator and other small business entities, as well as $4 million to begin the recapitalization of the Bahamas Development Bank. And what this does is builds on the success of previous years with the SBDC and some of these other entities in actually getting cash into the hands of small businesses through grants, through loans, through loan guarantees. And the SBDC has done a good job of actually making the public aware of what they do. So the Access Accelerator is there. There are a range of different programs targeting youth, some targeting women, some targeting the family islands, and various sectors. So you will hear more about that as we roll out. Of course, as the Prime Minister said, there's also the tax-free zones in 11 southern islands, including Andros. And the rationale there was a very straightforward one. The government sought to focus these concessions on those islands where the level of development hasn't kept pace with the rest of the country. In the northern corridor, the northeastern corridor, those islands tend to be more developed and have some economic momentum. So the government wanted specifically to try to incentivize activity in the less developed islands. And what that will do, it will allow for duty and VAT concessions on construction-related activities, on all activity related to building or expanding a business. It also allows for 0% VAT on conveyances of land and buildings under 500,000. So that's intended to allow Bahamians, middle-class Bahamians, working-class Bahamians who want to either buy land or who are looking to build within the southern islands to actually not have to pay the 2.5%, 10% on the transactions. The plan, and on the healthcare system, what the government has done is earmarked $100 million. About $70 million of that will be coming through this fiscal period, meaning before July, by virtue of what the Prime Minister would have announced yesterday through resolution, and that will allow for financing of the reconstruction or a new construction, major new wing of the Princess Margaret Hospital. And so that project will last about 18 to 24 months, but the financing for that is being secured this fiscal year. Next, and you'll see in the budget some $19 million to begin a $39 million project to, again, create a brand new wing, a brand new tower at the Rand in Grand Bahama, and a telemedicine initiative. And the telemedicine initiative will actually allow doctors in the Bahamas or anywhere to actually do very, very critical care and specialist care to persons no matter where they may live within the Bahamas. And of course, in tourism, the notion is really to be targeted and focused, to see what can be done to ensure that the marketing dollars are spent in a very deliberate way, that the home porting initiatives that you've been hearing about from Crystal Cruises and other entities, that can be realized, and that Bahamians have the opportunity to be able to provide services in support of this home porting initiative. And of course, as the infrastructure builds out in the family islands, and those family islands certainly starting to get a larger share of the tourism, to ensure that Bahamians have the opportunities to be able to do the vacation home rentals and the other support mechanisms to support what is an expanding field. On private and public sector investment, the minister spoke a great deal about this. There are several key things that are happening here. In order to have accelerated economic recovery, you need both public sector infrastructure development and you need private sector capital. So the Invest Bahamas project will really create, for the first time, a modern investment agency, both for Bahamian investors and for foreign investors of size. So this intends to just streamline and create some very set targets that will allow persons to be able to get their investments approved in time, in a timely way, and be able to roll it out. There's also a move towards PPPs, as is happening in the Family Islands, North Eleuthera, Exuma, and Long Island, so that private capital could be leveraged. On top of that, this year the government will introduce a national investment fund that will allow Bahamian investors and foreign investors to actually invest in those public projects where there is a commercial opportunity. Ports, airports, those sorts of things. The government will mobilize private capital to go along with public capital in order to accelerate the pace of infrastructure development. And of course, accelerating the pace of digital transformation. This is one of those that has proved to be very, very popular. I invite all of you to go to My Gateway fiscal.gov.bs and check it out. And what that is, it's a single gateway that allows persons to be able to access a range of public services, whether it's renewal of driver's license, renewal of a passport, to get a police certificate. The My Gateway platform is in place and will be expanded throughout the year. And what that will do is that it will allow persons to be able initially to apply for and pay for their services, but eventually they will also be able to get back electronic records, records that blockchain certificates, so that the full end-to-end delivery of government services will be done. And of course, it just makes it easier for businesses and individuals to interact with government. Go forward. And of course, finally, fiscal responsibility. As the minister said, there are a range of tax concessions within the program, and all of the tax concessions are funded. So we are modifying the law around vacation home rentals, and what that will do, it will allow us to be able to get a full range of taxes from the vacation home rental market, Airbnbs, the VBNOs, a lot of the private renters. And if you are a foreign owner of a second home, whether you're on a marketplace or not, you will be required to pay the VAT. We're expanding the real property tax roll because there's a project in place that has just completed that has added 14,000 new properties valued at $9 billion to the tax roll. So these elements will, in a very tangible way, in a very clear way, allow us to expand the revenue roll and compensate for the tax concessions. And finally on this, of course, as the PM said yesterday, there's the sovereign control of the airspace now. That money doesn't come into the consolidated fund, but what it has allowed the government to do is to reduce its allocations to the Civil Aviation Authority and related agencies and because they will now be funded because of the revenues earned from the sovereign airspace control. So, and finally, I'll just stop here. The minister spoke about the debt management strategy, and I just want to make sure that the public is aware that notwithstanding the rapid increase in the deficits and the debt because of this crisis, it's all done within the context of an actual strategy. What we have been doing in the Ministry of Finance is seeing how we could contain our interest costs where possible. And we're leveraging our relationships with our international financial institutions, the World Bank, the IDB, and those, and to ensure that we get optimal interest rates. We're transforming where we have variable rates into fixed rates, and we're trying to marshal as much as we can through those international financial agencies because, quite frankly, their interest rates and their terms are much more significant. But moving forward, the Debt Management Act, which comes into effect July, requires us to have a debt management unit and to be able to publish and for the public what the actual debt management strategy is and how do we deal with medium-term and long-term liabilities of the government in a very open and transparent way. It also calls for the formation of a committee of persons outside of the Ministry of Finance, credible professionals who will be there to advise myself, my team, and the ministers on what the optimal debt mix and debt strategy should be. And finally, I think it's important to understand, I want to refer people back to our debt strategy reports, which are published in November. The last one was done in December of this year, but the reason I want to point people back to that is so that to let them know that in that document, it lays out what the strategy is to bring the government back down towards fiscal consolidation. And that the current deficit of $951 million is in line with that strategy that was prepared. It's a recognition of reality in a way that still takes us back down to fiscal consolidation. And provided that we are successful in the continuing opening of our economy, we feel very confident that this, coupled with the activities around Accelerate Bahamas, will take us back down to fiscal consolidation. It's going to take longer than we had originally anticipated, but the reality is that we are still operating within the context and parameters of a plan to get us to that point. And so with that, I close. We've gone a little bit over time, so we'll move quickly into our question and answer phase with the press. So thank you all for your attention. Okay, so the format today is we'll give all of the members of the press one question And time permitting, we will then allow you a second question. So you get one question this round, and time permitting, we will move on to a second round. So first up, I have Tyler Simonet from JCN. Tyler, if we can get your first question. Do we have Tyler?
Good morning.
Good morning.
Oh, good afternoon. Sorry.
Okay, go ahead with your question, Tyler.
Hello?
Yes, we can hear you. Go ahead with your question.
Okay, Mr. Johnson, you mentioned that the need for social support is still very high, and so is the unemployment rate. Can you say for how much longer can the government bear the brunt of unemployment assistance?
So, Tyler, I want to thank you for your very important question. And you know, that is one of the challenges that the pandemic really has caused. You know, we had unemployment levels, I think, down to about 10%, which was really one of the lowest levels that we had in recently. But unfortunately, the pandemic, and you know, everybody knows in terms of the lockdowns, the restrictions, all of those things that really had caused a negative impact in terms of employment. And we had to adjust. We had to go ahead and make necessary changes. So one of the things that we had to do was to first extend the normal unemployment benefits that one could get under NIB. But in addition to that, we had to also create a new program for unemployment, because those NIB, one, would have run out, and then after they ran out, we had to put in place a special structure to continue those unemployment benefits. It really was designed to be maybe a 3 or 4 month measure, but unfortunately, as a result, the pandemic kept going. It is still continuing, and we've had to extend it well over 12 months. We've had to extend it. We anticipate that up until September, that we will continue those existing unemployment benefits. But again, as we said, it is really about trying to transition from the government continuing to pay out the unemployment benefits to the government now finding ways to stimulate the private sector to create employment. And so you will see where there is some funding to temporarily continue those unemployment benefits, but then the additional funding is for us to provide the tax concessions to stimulate the private sector to continue and to accelerate their pace of employment. That's important, because we have to transition from just pure government support to private sector employment, because that's long-term sustainable employment. And so that's where the budget takes us, and as you'll see, that's sort of the number one priority, number one pillar that we focus on, which is employment. I don't know if FS, if you want to...
I just want to add to that, that also the social services have seen a bump up in their budget. Because as persons, come September, those persons still are still unemployed. The plan is to transition them off to a social services program. And so the social services would have got a bump up of around $20 million specifically. So that will allow persons who leave that unemployment program after September the social services who will still require some support to enter into that program. Theodore Seeley from Eyewitness News.
Hi, good morning. Can you hear me?
Yes, we can hear you. Thank you, Seeley. Yes. First question, Theodore.
So yesterday I noticed that it was a different tune than the fiscal presentation last year. Last year there was a lot of aggressive talk that there's no new taxes, but we didn't hear that in yesterday's budget presentation. Is government prepared to definitively state that there are no major new tax increases for Bahamians?
So Theodore, I want to again thank you for your important question. You know, the Prime Minister really spoke to those revenue measures and those new revenue measures. You would have heard when it comes to real estate, any transaction, and this would be for Bahamian or non-Bahamian, but any transaction that is above 2 million, and again, the whole purpose really is to focus not on the everyday working Bahamian, but really again to provide some equity when it comes to how the tax distribution is done. So it really is focused on those persons who could afford to pay more, and those persons who are buying and selling properties in excess of $2 million. The government believes that they can pay an additional amount, which is moving it from the 10% to 12%. We don't believe that it is going to dampen the market any. In fact, we think those persons who are in that sort of price range, it will not stop them at all from continuing to do and to purchase properties. You know, we even saw today persons from the real estate community come out and say that it will not have an effect on those persons who are focusing on above 2 million. In fact, their point was that we should continue to focus on making it easier for people when it comes to purchasing and selling land in the Bahamas, which is a point, by the way, that I completely agree with. So there are those revenue enhancement measures. We saw the issue with with tourism and those Airbnb, and again, that's targeted. You know, we wanted to create or to amend the law to make sure that we bring clarity to a situation where there wasn't clarity before. And again, being able to target a market that we believe will be able to afford to pay a little bit more and to assist us when it comes to revenue measures. We've had to have a balancing act in this. You know, we're in a situation where we are in an economic world crisis. We're in a situation where we've had a downturn that we've never seen before in the Bahamas. But we're also in a situation where we've had to pay out a whole lot more because people are in need as a result of the crisis. So you got to balance the fact that your revenues are down, you've had an economic downturn, but you don't want to increase taxes on those people who really cannot afford to pay it, but you have to strike a balance on how do you increase on those persons who may be able to afford. And we believe we've been able to strike that balance in this budget. And so that's really where the government has been focused on to strike the right balance when it comes to saving concessions for those who really need it, but also asking those who can afford it to pay a bit more.
Thank you very much. Cleopatra Murphy from ZNS. Cleopatra, are you there?
Hi.
Hi, good day,
Good
Cleopatra.
afternoon. It's actually Makushla.
Makushla, how you doing, Makushla? Go ahead with your question.
Considering we've heard that the country's deficit is at an elevated rate of $951+ million. Elaborate on how this in turn puts the Bahamas in an unfavorable position of having to borrow so much more. And this despite the point you recently made about us seeking to get the best interest rate moving forward.
All right, thank you very much for your question. So, as the Prime Minister and the Minister said, clearly the plan of the government prior to this crisis was moving back down towards a balanced budget and fiscal consolidation. As is true the world around, not just in the Bahamas, but you could pick almost any country, countries have had to respond with extraordinary measures. On a percentage basis, the U.S. has ramped up their deficit even bigger than the Bahamas and many other countries. Same is true in the European Union, same is true around the world. Because you have an extraordinary crisis, it has required our government and other governments to have to run up a significant deficit in order to be able to meet the social services requirements and keep the economy going through a severe crisis. Yes, it has meant that for the this current fiscal year, which ends July, and the current one, there is a substantial ramp up in the deficits. The way that is sustained, though, is through a plan. So what the government would have done is in its fiscal responsibility strategy, which again was published in December last year, it laid out that this upcoming fiscal year, we would anticipate a deficit of $954 million. It came in at $951 million. And so what local commentators with the international agencies have seen is a plan. But it also says in that plan that next year, the deficit will go down again to, I think, a number around $300 million as the economy reflates and going forward. Finally, this is the important point. It's that these are temporary and transitory. These are not structural. Where countries run into trouble is when they have structural deficits, meaning that even at the economy at full tilt, and you're still running big deficits. The deficits are occasioned because we had a substantial shutdown of the economy. And as we are seeing already, as the economies have opened up, our revenues are returning. And that means that these are not structural. So we will reflate a little bit. Yes, it is reason for caution and concern, but it isn't reason for alarm. It would be reason for alarm if these were structural and long-term. So going into the next year and the year after that, the deficits will come down. And we have a position and a strategy that we believe is sustainable. Jasmine Brown from R News.
Good afternoon. I noticed that in the budget book, the proceeds of borrowing is listed at $1.8 billion, but the borrowing resolution tabled in the House of Assembly by the Prime Minister was just over $871 million. I wanted to ask, where will the additional money be coming from if you have to borrow up to $1.8 billion, and how will it be used?
So I'm glad you asked that question because it is a subject of great mischief by a lot of other persons. Every year, going back to the beginning of the Bahamas, when you see the total borrowing, it includes monies to be refinanced. So generally in the Bahamas and in almost every other country, when you roll over your existing debt, you have to account for it. What constitutes the new net borrowing, meaning the addition to your debt, is the $871 million figure. The other one is just what we call rollover of debt. That is customary, and it does not add to the national debt. So what generally happens is the bonds are refinanced, the treasury bills are refinanced, and generally speaking, that happens without incident. So even in our downturn, even when the Bahamas were at great risk, almost all of our creditors rolled over their debt. And this isn't unique to the Bahamas. This happens around the world. So what you see, the gross borrowing number, and that number sometimes is thrown out, that isn't the significant number. The significant number is the net new borrowing because that's what adds to the debt. So that's just rolled over as a matter of course, because creditors, generally speaking, allow you to roll over, or new creditors come in and take up that particular slack. And that's no need for concern or no need for alarm at all. Chester Robar, the Nassau Guardian.
Yes, good afternoon. Wanted to ask, I know the Economic Recovery Committee had talked about looking at taxes and, equitable, a more equitable tax structure. Is that part of a plan that you're looking at investigating or doing a survey on coming up this year? And could that change in the next annual budget?
So just again, thank you. And I'll just say a couple of words on this, and then I'll also ask the Financial Secretary also to speak to it as well. So the Ministry of Finance, and this was actually spoken to yesterday by the Prime Minister, but the Ministry of Finance is doing a comprehensive assessment, being assisted by one of the international institutions as well, but to take a data-driven approach to this. Many people speak about changing our tax structure, and they almost in a just nonchalant way say that we should change it to this or change it to that and so on. But the Ministry of Finance, I don't believe Ministry of Finance has the luxury of just turning on a dime when it comes to changing our tax structure. And so there is a comprehensive study that is being done. with the assistance of the international institution. And that data-driven approach will then speak to us and drive us and guide us, really, in terms of the decisions that we make, in terms of the adjustments that we're going to make to a significant tax policy change. And so we want to be sort of data-driven with respect to this, and not just go ahead and do things sort of haphazardly. Also, once the results of that is done, then we have to have a dialogue with the public. Again, we cannot just sort of make changes at whim and then put them on the backs of the public without having a dialogue about it. And so we've again committed that once those results come in, we will then go back to the public and have a dialogue, have a discussion with the public in terms of what those results are, and then what direction the country should take. I'll let the FS also just speak to it.
And I
as
just
well.
want to add to that, the similar thing was happened during when the transition was made to value-added tax. There was a study done with the assistance of the IDB at the time to look at the dimensions and to figure out what to do. In addition to what the minister said too, you would recall that just several weeks ago, we signed an agreement with the University of the Bahamas for them to do fuller economic modeling. So a part of, as we do this tax study, and this tax study is informed of sort of real looking at the data to find out what is the true measure of tax fairness and tax equity. What would be the implications of adjusting it in one way or the other? That will also, the modeling that we're doing, that will be fed into that model so that we can understand the outcomes. Because as the minister and the PM said, the government's objective is to keep accelerated economic growth. So you want to be able to make sure that your tax policy supports and encourages that initiative. So both the study that will be done with the assistance of one of the multilaterals and the work that we're doing with UB will allow an empirical approach to be able to be developed, and as the Prime Minister and the Minister are committed to, then that will be shared with the public to start that discussion and dialogue. Neil Hartnell from the Tribune.
Hi, good day, Marlon. Good day, Minister.
Good day.
I wanted to ask you something I wanted to ask you about something that was not mentioned in the presentations, and that's the plan to require tenants in commercial properties where the landlords are delinquent on their property tax to pay their rent to the Department of Inland Revenue, because probably you saw from our article today in the paper, there were a lot of concerns and pushback expressed by realtors. Is the government going to take all the rental income or just the portion related to property tax? And if they do this, you're running into a risk of putting the landlord into default on their mortgage. There's a lot of concerns. People are asking, why isn't the government using the existing law to just take the properties and sell them off at auction, or require the lenders, if there's a mortgage on them, to pay the property tax on the delinquent landlord's behalf? So I wanted to sort of get the justification for this and where this idea came from.
So the first thing is we want to encourage all commercial property owners to come into the Department of Inland Revenue if you owe the real property tax, and to work with an arrangement. The policy of the government is very, very clear on this, as across all real property tax owners. It isn't the intent of the government to go and seize the property or to sell it. That's really last chance saloon. And that's an extreme position. So the simple response back to the landholder communities is that if you do owe real property tax, you should come in. However, as is true around the world, and this is the existing law, the law does allow, right now, without any change, for the government to garnish rent. So that facility exists in the law. What the amendment proposed to Parliament does is create the framework in which this is to happen through the tenant, so that it's clarity in the law of how that process would work. But it's a very easy way to avoid having to put the tenant or the owner in that position, is for persons who have delinquent real property tax to come forward. But the process will be very straightforward, and the law allows for the government, generally in a lot of these tax measures, to garnish earnings in order to satisfy the tax. Again, I'm going to repeat, the simple way to avoid having to go through this is if you are a commercial landowner and you currently have delinquent real property tax, please come to the Department of Inland Revenue, and they will do their best to be accommodating, to find a way to allow you to pay that over time, to avoid that particular circumstance. Finally, Rachel Knowles from the Nassau Guardian.
Good afternoon. I know that we spoke about taxes already. Sort of related to that, legislation for the legalization of medical marijuana is set to be tabled in the House shortly. Can you advise what kind of tax structure the government might be considering for that industry and how much revenue you're hoping to make from it should all the relevant bills pass?
So again, I want to thank you for your important question. I think I'm not going to make any news today with respect to the medical marijuana draft legislation. I think it is now being considered by the government, and I think once the government makes a final decision with respect to moving it to Parliament, we'll then be able to speak to all of those points with respect to revenue that can be generated from that industry. But again, I'm not seeking to make any new news with respect to medical marijuana today.
All right. Thank you, Minister. Natario McKinsey from Eyewitness News.
Good morning. Thank you. I just wanted to find out how much revenue government is foregoing with all of its various initiatives this upcoming fiscal.
So based on our projections, we're somewhere around $24-25 million in revenue foregone. And through the new measures, we're looking probably around $54 million in the new and enhanced measure. The lion's share of that, as the Prime Minister said yesterday, is in the vacation home rental market. We've actually looked at the numbers there, and we actually feel confident we may even beat that particular target, but we always err on the side of being conservative. But just in that alone is a significant uplift. And I want to tell people too, because we've had questions have asked of me, how easy is that? The good news for us is that Airbnb and VBNO around the world have a brand equity, have in their brand their willingness and preparedness to pay local taxes. When we travel around the world and we stay in Airbnbs, almost invariably there's a sales tax or VAT that's added to that. So engaging them is not an issue. It was just how they interpreted the law. And their interpretation was that it was payable only in the commission only. So the new draft legislation, once it's approved by Parliament, will clarify that. And we are going to start discussions with those entities next week to make them aware that come July, they will have this liability, whether they charge it on or not. So we feel very, very confident that the lion's share of the new revenue measures we will be able to collect.
We also want to stress again, and I think the question that you raised really, I think, is a significant one. But we really wanted to stress that we saw it really as our responsibility, that you were not going to just create tax concessions on one side without having those necessary measures to balance it. And that again takes into account of the situation as to where you're at. It takes into account the economic realities that you are. It takes into account your debt level. It takes into account the strategy that you want in terms of being able to reduce the deficit as well. So it is a balanced approach that the Ministry of Finance have been able to get. They've also been able to say that those tax concessions for those people who really need it, and those tax concessions that we want to use to help to stimulate economic activity are good, but at the same time, we can't be reckless and not find ways upon which we will make up for that revenue. And so I think that question that you had was a very, very important one. Thank you.
Okay, well, we have time for one more round, and we'll start with Natario, and we'll move our way back up in reverse order. So Natario, do you have a second question?
Thank you, sir. Thank you, gentlemen. Yes, I just was wondering, Mr. Johnson, maybe I know when the pandemic started, finance had done some modeling. I just was wondering how things have played out, where we sit in terms of what finance had projected.
Well, again, the PM spoke to that. So as it stands now, we're fairly on track with revenue. Expenditure on the recurrent side has gone a little higher because, as the Minister and PM said, the government decided to extend the unemployment benefits, but that was compensated by a reduction in the capital because the government took the conscious decision to withhold capital spending. We were behind in the budget in the first months, but the last sort of 4 or 5 months, we've actually overperformed. So that has brought us back into balance. So, the dynamics between capital and recurring have changed, but we're still in line with what we had projected, particularly because specifically from January on, we've seen some dynamism in the economy as the economy has opened back up. All right, Rachel Knowles from The Guardian. Do you have a second question?
Hi.
Yes.
Yeah. So, could a better than expected tourism rebound change the government's US borrowing plan? Could it be enough to shore up the reserves without as much borrowing?
Right, well, the good news on the reserves, as the Prime Minister said yesterday, is that the reserves actually now today are higher than they were when the pandemic started. So the good news for all of us is that the Bahamian dollar is just as secure as it's been pre-pandemic, notwithstanding legitimate concerns that we may have seen a rundown in the foreign reserves, even after borrowing. So the short answer to your question is yes. If the circumstances are such that the rebound is stronger, then our borrowing requirements are less, and so the government will only borrow, again, consistent with the plan. But if we, as we hope, do better than the plan, then it reduces our borrowing requirements. So thank you for that question.
If I can also, one point we want to stress, and we cannot again sort of leave this out, but a lot of it also depends upon us, and it depends upon how we get vaccinated. The quicker we are able to vaccinate our population, the quicker we are able to accelerate our tourism product. And so we want people to, not just look at this sort of in a vacuum, but we want you to look at this holistically. The reality is that if we, as a nation, are able to reach our target quickly when it comes to vaccination, then that makes us a far more attractive country when it comes to tourism. It then helps us to reduce our the level that we are on the U.S.'s list for countries when it comes to dealing with COVID. And if we're able to do that,
economic activity from entertainment.
and absolutely, all of the economic activity that you're going to have with respect to entertainment, with respect to fully opening up the economy as well. So we have to stress that. I mean, that's also a part of the economic plan and strategy, is to encourage our local Bahamians to ensure that they get vaccinated. It is, like I said, not just to be seen sort of on the outside, but it is really a part of the economic development for us in this coming year.
All right, thank you very much. Neil Hartnell from the Tribune. Do you have a second question, Neil?
Hi, Marlon. Yeah, thanks. My question here is, one thing that wasn't addressed in the budget yesterday was the issue of the unfunded pension liabilities, the public sector pension liabilities, because I see there's been a 10 million jump in that funding for pensions this year. So I just wondered what stage has been reached by the Ministry of Finance in terms of addressing those liabilities, because I know that's been spoken of as a potential multi-billion ticking time bomb for the public sector finances. And also, how likely is it that further tax measures will be needed in upcoming budgets to address the deficit and debt?
So let me take the question on the pension. We were delayed in completing an ongoing pension study that was announced, I think, last year or maybe even the year before. But I am pleased to say that we finally have gotten all of the data that we required from the agencies. So I imagine certainly before the end of summer, we'll be in a position to provide Cabinet with some recommendations as to the pension going forward. But those pension liabilities are factored in to the fiscal strategy plans going forward. So certainly in the medium term, we have factored those in as part of the plan. So there's no immediate concern there. On your question about tax going forward, I go back to what the Prime Minister and the Minister said. To the extent to which we can get the economy open, meaning all of us being vaccinated, that creates more economic activity, which by itself generates additional revenue. The extent to which we're able to, the accelerated Bahamas plan works with small business input, with investment, and we get the economy on a stable growth trajectory, that takes care of all of the considerations around increased revenue. So the short answer is, to the extent to which we can get back on a firm, sustained economic footing, then that obviates the need for additional taxes within the country. The Chester Robar from the Guardian. Do you have a question?
Yes, thank you. Just wanted to ask you, can you talk about the amount that's being spent on climate resilience and infrastructure? I know many multilateral organizations talk about how important that is for the country. It could create jobs. Obviously, it guards against the effects of hurricanes and how much that costs us. Are we spending enough? I see we're spending more later on in other budgets, but have we increased that enough this budget?
Just, I think, again, I think an excellent question, and I'll just say a couple of comments and then FS can speak to it as well. But I believe there was in the Ministry of Finance, I think about a $30 million allocation for climate resilient projects. And these are very important. These also will cover things like when it comes to our electricity and being able to put in place solar projects. Your question also gives me an opportunity to speak to a place that is close to me, which is in East Grand Bahama, and the funding that is allocated in the budget for microgrid installation in the East Grand Bahama area, which again, it is a prime example of what can be done in the Family Islands, and to make us more resilient, especially when it comes to storms. You know, sometimes in Grand Bahama, a storm will hit, but one area will be far more affected by another area. But because all of the power is on one grid, then it creates a real problem for the entire island. Well, East Grand Bahama is really going to be one of those first areas that can be set up with microgrids, so that if one area is down and damaged, then that doesn't necessarily mean that the other area is going to be equally affected. And that also may mean that you can get some of these areas back up and running at an even quicker pace. We've also seen really in this budget where, in this fiscal year, where we've started a solar light street lighting program. And I believe there's some funding in the budget also to continue that solar street lighting program. But we've seen it actually start in East Grand Bahama as well. So in the settlements such as McLeanstown and Pelican Point and High Rock, they have already installed a number of these solar street lights. And that can actually be an example of how we can do this throughout our Family Islands where there are small settlements. It's a prime way of us to be able to reduce our footprint. It's a prime way to reduce what we spend on fossil fuels, as well as making those areas more resilient and assist when it comes to storms. So yes, there is some funding in the budget for us to continue those types of projects.
And I'll only quickly add to that you will see even in the Ministry of Education and Ministry of Works build out, and the Public Health with the Prime Minister spoke to it yesterday, with the new towers, that the designs of these will be bearing in mind the fact that the climate, the resiliency, the climate events, so that the resiliency within the infrastructure for climate resiliency will actually be built in. Jasmine Brown from R News, do you have a second question?
Yes, I do. It was said earlier that the recovery of the economy will rely on several factors, including the acceleration program. And Minister Thompson just mentioned the vaccination program and how important vaccination will be. Considering the fact that we have some vaccine hesitancy, and as it stands now, we do not have enough doses for herd immunity. Is there a plan B for economic recovery if things aren't in place or the factors that you mentioned earlier are not in place?
So let me see if I can at least address some of that. One is the vaccination really is key. And again, I have to sort of continue to stress that. There are obviously challenges that have been spoken about on a number of occasions, challenges with respect to getting in additional vaccines, but challenges also in terms of getting the public and getting more participation from the public. we're looking at ways with respect to how we continue to educate and how we continue to encourage the public with respect to getting vaccinated. One good thing that the Prime Minister decided was to involve the private sector in this whole question of vaccinations. And I think that has assisted us greatly, that you've been able to get a number of the private sector participation, you've been able to get a number of volunteers, and we are continuing on a daily basis. The Prime Minister is himself, the Minister for Health is himself, other ministers through their own diplomatic channels themselves have been working to be able to secure additional vaccines. So that's still the number one priority for our own health purposes, but also for the health of our economy, is being focused with respect to that. But that's not the only track that we are taking when it comes to the economy. We also are looking at how we use those targeted tax breaks to accelerate our local businesses, to accelerate the local economy, to accelerate those different industries. And then one thing we want to point out as well is we're still focusing from the Small Business Development Center on assisting those non-tourism, but those other industries like fishes, like farming, like technology, where you will see specific grants in place, and those grants will continue in order for us to be able to spur and to start and to assist and drive those other industries, because we want to, again, be able to work on diversifying the economy. So we're pressing forward with respect to how we do other things at the same time. We got to make it easier for people to do business. So we again focusing on the ease of doing business. So you'll see us also trying to do things like expanding the provisional licenses and trying to get people in business quicker. So we are focusing on the Invest Bahamas to try and get Bahamian and foreign direct investment moving at a quicker pace, trying to streamline these things. So on the one hand, yes, we must focus on our tourism, focus on the vaccination to be able to build that. But on the other hand, we must focus on how do we diversify the economy, how do we make it easier for people to do business, how do we get government bureaucracy out of the way and let private sector do what they do best. And if they are able then to do that, then we will then begin to see that economic growth, and we'll be able to see the economic activity. Things like the Family Island incentives. I mean, that really, again, was the focus on what we want to do, is to be able to let those different areas that have great potential. I mean, some of those islands are some of the most beautiful islands in the world and have some of the greatest potential to be able to be developed. And so if we are able to sort of focus attention to incentivize those islands, then that again is one of those areas that we will be able to spur the economic activity. So we got to be able to do things and think out of the box, do things a little bit differently. And that Family Island incentive and encouraging Family Islands to be able to develop themselves, again, is a way for us to be able to spur economic activity.
Thank you very much. Was that number 3, ZNS, Makushla? Makushla, ZNS, Makushla Pinda, do you have another question? Sorry about that. Makushla, is anyone from ZNS there? Okay. Theodore Seeley from Eyewitness News. Do you have a second question, Theodore?
Yeah, I don't know if you're feeling nice today. I'd like to ask just a point of clarification on the first question I asked, and then I want to ask my second question. So I need to know definitively, can we expect that VAT will not be increased in this next fiscal period, which is the run-up before the next general election and after the next general election, should the FNM win? Is VAT not going to be increased? And then my second question actually is, can you explain how a $400 VAT break per employee for a business will work when the business doesn't actually pay VAT. The consumer does.
You want to take the first question? I'll take the second.
Yeah, I guess I'll take the first question. Again, I'm not trying to be sort of evasive in this. I mean, the Prime Minister laid out the revenue measures for this year. That's the plan. That was what was articulated. And so there is an area with respect to real estate where there is an increase from 10% to 12% on those transactions that are above 2 million.
The value of the transaction.
But the value of the transaction is above 2 million. And so that's the only area that the government has articulated any change upward with respect to VAT. We are pleased that when you look at things like the Family Island transactions, that VAT is actually decreased to zero when it comes to real estate transactions that are in the Family Islands that are under 500,000. We are also pleased that when we look at Abaco and Grand Bahama, that for real estate transactions that are with a value of under 250,000, that the value-added tax is now at zero. And so, there's a balancing act that has to be made. But we're transparent. It is what it is. The Prime Minister's statement, in fact, not just the Prime Minister's statement, but the legislation that was tabled at the same time speaks to what the intention of the government is.
So yeah, and on the second question around as we did in the current initiative around the payroll support program, the value-added tax or the business license tax, depending on the business, was used as part of the credit. Yes, the consumer pays it, but it is a tax into the government. And so for simplicity's sake, it's much easier rather than the government finding money to send out to the businesses to pay them. It's because they collect the VAT on behalf of the government. The simplest way for them to get a tax break is to allow them to credit it. So what it is in essence is the government saying that yes, the taxes that come into the cover, we will allow you a credit on that to employ someone. So it's a very simple way, a very efficient way for the government to effect the payments for these persons, the same way that the government effected the payments for the 14,000 persons who, during the current program, the tax credit, tax deferral, payroll support program, it was an efficient way for the government to actually make the payment on those payrolls. So what the government is in essence doing is saying that for participating companies, and for companies to participate, they have to be in good standing with the tax authorities and with NIB to participate in this program. Through the tax credit, the government will, in essence, pay up to $400 per employee, depending on what they make, for up to 10 employees for up to a year. It's allowing companies to bring on more persons and to so address the unemployment situation in a very, very direct way. Tyler Simonet from JCN, do you have another question?
Good afternoon. Can you hear me?
Yes, good afternoon. Go ahead, Tyler.
Okay, my second question is there any consideration being made for the Hurricane Dorian tax break that expires this coming June to be extended?
So, Tyler, I'm very pleased to reconfirm what the Prime Minister said yesterday, which was that the SIRS order with respect to Abaco and Grand Bahama that was scheduled to come to an end at the end of June will now be extended to December. And so for all of those residents who are in Abaco and who are in Grand Bahama, who were taking advantage of the tax concessions on building materials and appliances and furnitures, they can look forward to being able to take advantage of those concessions up until December of this year. So it is being extended from June to December, which again will really be a great help for those persons in Abaco. And I know from, again, experience from living in Grand Bahama that many people were concerned about this. And many people were a little anxious in terms of whether they were going to be able to be extended. So we're very pleased to be able to say, yes, they will be extended to December.
All right, thank you very much. So I would like to say first, hearty thank you to the members of press for their very thoughtful and insightful questions. We appreciate that, and we believe they will bring great illumination to many elements of the presentation. I'd like to thank the team from BIS and all of the members of our communications team who worked hard to put together this press conference. I'd like to thank Minister Thompson for making his presentation and addressing his questions. And so thank all of you in the viewing audience for taking time to be a part of this. So with that, we would like to bid all of you a very, very good afternoon, and stay tuned, because what I want to just stress is that beginning June 2nd, the new budget, bahamasbudget.gov.bs, we will have a brand new reload so that all of the budgetary elements will actually be available there for you to be able to go to peruse and the like. And certainly as you have questions, link us to our social media arms on Facebook, on Instagram, on Twitter, and give us your feedback so that we can address any of the questions you may have. Thank you much. Good afternoon.